agreement of all the existing partners. And when it comes to the dissolution of the partnership, we need to first of all dispose of all the asset, and then we need to pay off the liabilities as well. Right, and for this purpose, for the purpose of dissolution, the question may ask us to prepare the following types of account: realization account, partners capital account, or the cash or bank account, depending upon the question. We understood the format of the realization account, and then we did few questions wherein we were required to prepare the realization account. We did 2-3 questions wherein we were only required to prepare the realization account. Then we did 1 or 2 questions, I think, wherein we were required to prepare accounts other than the realization account, such as the cash account or the capital account and the loan account was required. Sorry, cash account and the partners loan account and the partners capital account was required. So we already did all these things. In the last class, we were talking about the journal entry based on the dissolution. So I think I have discussed this question with you in the last class, right? We discussed question number 5 in the previous session. So I hope everything that we discussed in the last class is clear to all of you. Is that clear, everybody? Anybody have any doubt regarding the topic that we discussed in the session? Alexander, am I audible to you?
Yes, sir. Sir, I was not there in the last class, so.
All right, everybody. So let's continue with the next question. In today's session, we will talk about question number 6. Just a moment. Solution to question number 6. Let's just first of all read this question carefully. It says that we need to pass the journal entries in the following, considering the following transactions of the firm P and Q after the various asset and outside the liabilities have been transferred to realization account. Then it says the following transactions are given. Bank loan was there, 12,000 was paid. The stock worth rupees 16,000 was taken over by the partner Q. Partner P paid a creditor of rupees 4,000, and asset not appearing in the books of account realized 1,200. Expenses of realization 2,000 were paid by partner Q. Profit on realization 36,000 was distributed between P and Q in the ratio of 5:4. Okay, so let me show you how can we solve it. All right, so first thing, date particulars, and this is the debit side and the credit. Okay, so let's first of all start with the first transaction. First thing that is in the question is that bank loan of rupees 12,000 was paid. Na? So what will be the general entry for this particular transaction, particular point, particular adjustment? Anyone want to tell me? Eben, Ammon, Alexander. What will be the general entry for the first transaction? First adjustment, bank loan rupees 12,000 paid. Hello everyone, am I audible to all of you?
Yes, sir.
Yes.
Yeah, so tell me the correct general entry for this. Bank loan rupees 12,000 was paid.
Sir, realization.
Realization.
Yes.
First of all, tell me, bank loan is what? Bank loan is a liability or it is an asset? Tell me quickly.
Sir, liability.
It is a liability, right? So whenever we pay off the liability, it is regarded on which side of the realization account, on the debit side or the credit side? Payment of liability shown on which side of the liability or of the realization account?
Credit side.
No. Payment of all liabilities are to be shown on the debit side.
Debit side.
Right? Payment like this, let me just show you. You're not able to recall. See, this is the realization account, right? This is the realization account for the question that we did. So this is question number 4, wherein we prepared the realization account. Now, pay attention. See, this is the liabilities, right? On the this is the credit side of the realization account, and you, as you can see on the credit side, we have the liabilities recorded on the credit side. But whenever it comes to the payment of liability, it is always shown on the debit side. See here, to cash, creditors, bills payable. What are these? These are liabilities. So whenever payment are being made to the liabilities, it is always shown on the debit side of the realization account. Right? Is that clear to you? Is that clear, everybody?
Yes.
Yes, sir.
And because it is shown on the debit side, so what will be the journal entry for this? This will be written as realization account debit realization account debit to bank account. Is that clear? Correct general entry for this will be realization account debit to bank account. Now let's see the value. Value was 12,000. So we will write that down here. 12,000 on the debit column and 12,000 in the credit column. Is that clear, everybody?
Yes.
Yes or no?
Yes, sir.
Yes. Okay. After this, okay. Then we have second adjustment. It is stock worth rupees 1,600 was taken over by partner Q. Now tell me, on which side of the realization account we would write this adjustment? On the debit side or on the credit side? One of the asset is being taken over by the partner.
Partners capital to realization.
Partners capital account debit to realization. That's right. That means it is such adjustment is written on the credit side of the realization account, right? So therefore, the correct general entry for this will be partners capital account will be debited. Partners capital account debit to realization account, and the amount was 16,000. Okay, so I'm sorry, partners capital account. Q is taking over the Q was taking over the stock. Na? So instead of writing partners capital account, we should write Q's capital account. Q's capital account debit 16,000. 16,000. I'm sure that all of you will be able to write down the narration of the transaction. I'm not writing the narration. You can do that yourself as well. Okay, moving on to the next adjustment. In the next adjustment, it says that partners P paid creditor 4,000. Tell me anyone, tell me the correct journal entry for this. Partner P paid creditors. What will be the journal entry for this?
The realization account that the partners capital.
Realization account debit to?
Partners capital.
Yeah, that's right. Realization account debit to partners capital account. But instead of writing down the partners capital account, we should write down the name of the name of such partner. So the journal entry for this will be realization account debit to P's capital account, and amount was 4,000. Okay, next one is an asset not appearing in the book of account realized 1200. So this is unrecorded asset being realized. What will be the journal entry for this? If unrecorded asset realized, what is the journal entry for this? Tell me. Tell me, guys, anyone? It will be, see, whenever unrecorded asset realized, on which side of the realization account you write that? On the credit side, na? So the journal entry for this will be bank account debit to realization account. Bank account debit to realization account. Amount was 1200. Got it, everybody? Is this clear to all of you or not?
Yes.
Yes, sir.
Okay. Then moving on to the next transaction D. Sorry, E. Expenses of realization 2000 were paid by partner Q. Tell me, on which side of the realization account we write such kind of adjustment? First of all, tell me on which side of the realization account we record this. Whenever expenses of realization is being paid, we need to record it on the debit side of the realization account. But since it is being paid by partner Q, so it will be recorded on the debit side by the name of partner. Partner Q's capital account will be written in the realization. So basically the journal entry for this will be it will be realization account will be debited. Realization account debit to who is going to bear such realization expense? It is being paid by partner Q. So the Q's capital account or Q's account. Amount was 2000. Then next, in the next transaction, it says profit on realization 36,000 was distributed to P and Q in the ratio of 5:4. Tell me anyone what will be the general entry for this, for the last event, last adjustment. Profit and loss being distributed.
Sir, realization account debit to
Mhm.
P capital account and Q capital account.
Perfect. Very good, Alexander. That's great. Realization account debit. Realization account debit to P's capital account to Q's capital. And it will be distributed among the partners in the ratio of 5. It was the ratio. The ratio was 5:4. So the general entry will be realization account debit to P's capital account, Q's capital account. Amount was 36,000. So 36,000. It will be distributed among the P and Q in the ratio of 5:4. So 36,000 into 5/4. That means just a minute. This will be 16,022. Right? Is it clear? Yes or no? Everybody?
Yes.
Yes, sir.
We passed all the adjustment into the journal. This is the solution of this question. I hope everything is clear to all of you. Anybody having any doubt?
No doubts.
No doubts. All right, then in that case, I think we can move to the next question, which is little different from this one, but not that difficult. Just a minute. Then everybody, shall we move to the next question, all of you?
Yes, sir.
All right, you can take the screenshot of this question, question number 7. And you need to solve this question. I'm giving you 5-7 minutes. Solve this question. I'm just, let me just explain this question once. It says that the firm of Manjeet, Sujit, and Jagjit was dissolved. So there are 3 partners, and this firm is being dissolved. It was agreed that the Sujit will take care of the dissolution related activities and will get 10% 10% of the value of the asset realized. So Sujit will be getting a kind of commission for the basically handling all the activities relating to dissolution, and Sujit agreed to bear the realization expenses as well. Okay, and asset realized rupees 10,750,000 and realization expenses amounted to 90,000, which were paid from the firm's cash. Rupees 4,50,000 were paid to creditors in full settlement of their claim. You need to pass the necessary journal entry for the above transactions. All right, I hope all of you will be able to solve it. I'm just giving you 5-7 minutes. Pass the journal entry for all these transaction or adjustments. Understood, everybody? The question is clear to all of you, yes or no? I want you to try this question once, and then I'll give you the correct solution of this. Got it, everyone? Yes or no?
Yes, sir. Yes, sir.
All right, do it. Done, everyone?
Yes, sir.
What about everyone else? Evan, Ayan, Aman, Sania, Pranav, Mariam. Tell me tell me whether you guys have done it or not. All right, so since nobody is responding, so I'm presuming that you are not able to solve it. Let me show you the solution of this question. See, first of all, since the first information in the question was about the asset being realized at rupees 10 lakh 750, So we'll first of all write down the journal entry for this. And what will be the journal entry for the realization of the asset? Anyone? Please tell me.
Cash to realization.
Cash account debit to realization account.
Realization.
Perfect, very good. Cash account debit to realization account. Amount was 2,750,000. Moving on to second transaction, second journal entry. Question also asks us to pay. It is given in the question that Sujit will take care of the dissolution related activities and he will be getting 10% of the value of the asset being realized as the commission, kind of commission. So the general entry for this will be Sujit is getting commission, right? Sujit is executing the dissolution related activity and he will be getting commission. So that will be, in that case, Sujit, in that case, realization account will be debited. Realization account debit to anyone?
The two partners.
Sorry?
Or is it partners? Yeah, Sujit.
Yes. Sujit's capital account. Okay. Sujit's capital and amount will be 10% of the realized value. 10% of 10,750 is 1,750. 1,75,000. Right, everybody understood this point? I'm not writing the narration, guys, but narration is compulsory. You need to write down the narration of every journal entry. I'm not writing it down. If anybody having any problem writing the narration, do let me know so that I can write down the narration as well along with the journal.
So can you write the narration?
You want me to write down the narration as well. So for this, narration will be being 10% of realized of assets realized paid to Sujit. Transfer to Sujit. This way you will be writing down the variation of this particular adjustment. Then the next transaction. In the next information, it says that realization expenses were rupees 90,000. Okay, so who have agreed to bear the realization expense? Who have agreed to bear the realization expense?
Sujit.
Sujit have bear to Sujit have agreed to bear the realization expense, right? So that means the entire realization expense need to be paid by Sujit only. That means his personal account will be debited. Sujit's capital account will be debited. Sujit's capital account will be debited by 90,000 to cash account. Right, everybody? This is the
Yes.
journal entry for the realization expenses being paid by Sujit. Being realization expense paid by Sujit. I hope this journal entry is clear to everyone. Say yes or no. Everybody.
Yes, sir.
Is this clear? Okay.
Yes, sir.
Then the next thing, question is also giving us some information about the creditors being paid. right? It says which were paid from the firm. Okay, rupees 4,50,000 were paid to the creditors in full settlement of their claim. Anybody, please tell me the correct journal entry for the payment of the liability. What will be the journal entry when we pay liability? Anyone, please tell me. What will be the journal entry for the last event, last adjustment? Rupees 4,50,000 were paid to the creditors.
Sir, realization debit to
Mhm.
bank.
Realization account debit to bank. That's right. Realization account debit to bank account, and relation will be the creditors paid in full settlement. Right, everyone, and the amount will be 4,50,000. Right, everybody, is that clear? All of you?
Yes, sir.
Okay, so we have entered all the transactions. We have journalized all the transactions. I hope this question is also clear to all of you. If anybody have any problem understanding anything, do let me know. Otherwise, we'll move to the next question. Is this clear, everybody?
Yes, sir. It's clear.
It's clear, okay. All right, and so moving on to
Sir, wait,
next.
can you show the last cake?
Last entry.
Yes,
Please note it quickly. All right, Mariam. Okay, so we will now move to the next question. Done, Eben?
yes, sir.
Okay, then. So moving on to the next question. Question number 8. All right, I want all of you to try this question as well. You may find this a little difficult comparing with the previous questions. Question is asking us to pass the journal entry again. It says there was an old furniture in the firm which had been written off earlier completely. This was sold for rupees 3,000. So one of the written off furniture is being sold now. All right, and then the adjustment says Ashish, an old customer whose account for rupees 1,000 was written off as bad debt earlier in the previous year, paid 60% of the amount. That means this is the adjustment relating to bad debt recovered. Bad debt is being recovered. Then the third adjustment says Paras agreed to take over the firm's goodwill at valuation of rupees 30,000. It says that it was not recorded in the book of the firm earlier. So that this is unrecorded goodwill. See, it is completely irrelevant for the purpose of the passing of the journal entry. It is completely irrelevant whether any asset or liability was there in the books or not, whether it was recorded or not recorded. That is completely not at all important. Whether or not the asset is recorded in the books or not, we need to pass the same journal entry. And in case of the liability as well, irrespective of the fact whether the liability is one of the liability which was recorded in the book or whether it was not recorded in the book, it is not going to change the treatment. It is not going to affect the journal entry. So journal entry remains same in every situation, whether it is in case of the recorded asset or in case of the unrecorded asset, recorded liability or unrecorded liability. That does not affect the journal entry. Okay, moving on to the fourth adjustment, there was an old typewriter which had been written off. Now see, this one was the old, there was an old typewriter which was earlier written off. Now we are able to realize 400 on account of sale of such typewriter. and it was taken over by Priya at a price less than 25%. Price less 25%. Okay. And adjustment E says there were 100 share of rupees 10 each in Star Limited acquired at a cost of rupees 3,000, which had been written off completely from the book. These shares valued at 6 rupees each and divided among the partners in their profit sharing ratio. All right, I want all of you to try this question. This is, however, a little difficult comparing with the previous question, but not that difficult that you won't be able to solve it. I think all of you will be able to solve it. Do start the question, start solving it, start passing the journal entry. If you're finding anything difficult, do let me know. I'm giving you 7 minutes. Pass the journal entry. Let me just show you first the treatment of the first adjustment, and rest I think you will be able to solve on your own. Just a minute. All right, so the treatment of the first adjustment will be, what is there in the question? It says there was an old furniture which was written off. So that means there was an old and unrecorded furniture. That means if it is written off from the books of account, that means it is unrecorded in the books. So we are able to realize 3,000 on sale of such asset which is not recorded in the books of account, which was old and unrecorded. So on account of old and unrecorded asset, or on account of sale of old and unrecorded furniture, we are able to realize 3,000. So the journal entry for this will be same
Cash.
as any other asset being realized. It will be cash
Cash.
account debit to,
To realization.
correct, cash account debit to realization account. No effect upon the journal entry. We'll write down the narration as being old and unrecorded furniture realized, and the amount was 3,000. Got it, everyone? Yes or no?
Yes, sir.
So this way you need to pass the other journal entries as well. Kindly solve it. I'm giving you a few minutes. Doing everyone? Anyone having any problem? All right, let me show you the journal entry for the second adjustment. It says Ashish, an old customer whose account for rupees 1000 was written off as bad debt in the previous year, paid 60% of that amount. So the journal entry for this will be, since bad debt which was earlier written off is being realized, right? So that means cash account will be debited again. Cash account debit to realization account. Is that right, everyone? Everybody did the same thing. There's cash account debit to realization account, and the narration will be being bad debt realized at 60%. What was the value of the letter? Value of the letter was 1000. It realized up to 60%. That means we're able to realize 600 only. Right, everybody? Is everything clear till this point?
Yes, sir.
Okay, moving on to next point. In the next adjustment says Paras agreed to take over firm's goodwill, which was not recorded in the book at a valuation of rupees 30,000. Anyone please tell me the general entry for this one? Anyone please tell me?
Close capital account method to realize.
Yeah, Paras capital. Paras capital account. To realization account. And it will be
Being assets taken over by
being unrecorded goodwill taken over. And the amount was 30,000. Understood, everybody?
Yes, sir.
Okay. Moving on to the next adjustment. D. There was an old typewriter which had been written off completely from the book. It was estimated to realize 400. It was taken by Priya at an estimated price less 25%. What will be the general entry for this? Anyone?
Sir, Priya account debit, the Priya capital account debit 300 to realization.
Priya's capital account debit to realization account. Yeah, that's right. 300. Capital account to realization account. $300. And narration will be being typewriter, unrecorded typewriter. At price less 25%. Understood, everybody? This journal entry is clear to all of you, yes or no?
Yes, sir.
Okay. Moving on to the next one, the last one. And the last point, it says that there was 100 shares of rupees 10 each. Okay, 100 shares of rupees 10 each. That means 100 into 10 means 1000 value of shares, which was required at a cost of rupees 2000. Now, which had been written off completely from the book. Now these shares are valued at 6 each and being divided between the partners in their profit sharing ratio. So in simple terms, that the entire statement basically trying to say is that it's trying to say that 100 shares are realized at rupees 6 per share. We are able to realize 6 rupees per share. So that means total amount collected on by selling of the shares in the market is 600. Total collection is 600. And the same amount is being distributed among the partners in the profit sharing ratio. And since the profit sharing ratio is not given in the question, so we will simply presume that Paras and Priya both are the equal partners. So 300 will be taken over by Paras and 300 will be taken over by Priya. So is this point clear, everybody? 100 shares are being realized at rupees 6 each. That means 600 is total amount being realized, total amount collected on realization of the 100 shares. And the same amount is being distributed among the partners in their profit sharing ratio, that is in the equal ratio. Tell me if this point is clear to everybody.
Yes, sir.
Okay, Alexander, kindly tell me the correct general entry for this, which you understood the statement. Kindly tell me
Sir,
the correct general entry.
sir, Paris capital account debit 300,
Why
Priya.
will you why do you want to debit Paras capital account? We are don't you think we are transferring 300 into partners capital account, Paras capital account, and 300 to the Priya's account? So instead of debiting it, I think it should be credited. Yes or no?
Okay, sir, I thought that
No,
they
I'm just asking. I'm not saying anything. I just wanted to know whether I should do this or whether I should debit the partner's capital account.
not sure, sir.
Not sure. See, these shares are what? Shares are asset, na? Shares are assets. Shares are. This is basically an investment. The firm have earlier purchased 100 shares, so shares are kind of investment. Shares are kind of investment. So basically, what question is trying to tell you is that these investment of 100 shares or investment whose value was 600, whose realizable value is 600, it is being taken over by partners in their profit sharing ratio. So yeah, you correctly tell me the journal entry that we need to debit partners capital account to realization account. This will be considered as asset being realized, just like any other asset. This time partners are taking over the shares of the firm, shares in which firm have earlier invested. I hope this point is clear.
Yes,
The
sir.
general entry will be partners capital account debit. Oh, sorry. Paras capital account debit. Priya's capital account debit. To realization. And narration will be being 100 unrecorded shares. Realizing distributed. Understood, everybody? This last point is clear to all of you or not?
Yes, sir.
Understood. Okay. So this was the solution of question number 8. Abin, is this clear to you? Mariam, is this clear to you?
Sir, can you show the last entry?
Last renovation. Done. Okay. All right. So that is all about question number 8, and we won't be discussing any more questions in today's class. There's one announcement. We will be conducting a small test on Sunday. The topic will be death of partner. So do prepare for the test. All right, and all right. So this is it. I'm giving you one question for the homework. Question number 8 we just did in the class, and question number 9 will be homework. Question number 9 is your homework. Kindly take the screenshot. And do prepare well for the test that we will be conducting on Sunday. All right, everyone. So this is it for today's session. Thank you so much, everybody. I hope everything is clear today. We'll see you in the next class. Till then, take care. Goodbye.
Thank you, sir. Take care. Bye bye.
Thank you, sir. Bye, sir.
Last entry that amounts.